The National Bank of Hungary will primarily be driven by the ECB's inflation outlook and FX rate. Christopher Shiells, Informa Global Markets. The National Bank of Hungary kept rates on hold today at 1.35% as expected. Are they waiting for the ECB to act first? And do you think there is room for Hungary to resume cuts?
In the statement, the MBH did explicitly state that they will closely examine the measures taken by the ECB and will further loosen policy if needed, but primarily using existing unconventional tools, which are the small tweaks to policy they've been using to keep bond yields at the longer end lower. So not really rate cuts, but it doesn't rule out rate cuts either. But we think that the ECB easing again in March is just one part of the process, which is and the MBH will primarily be driven by their inflation outlook and FX rate. This could deteriorate further when the ECB eases again, and likely will, pushing the forint higher versus the euro. But we won't know what the central bank are thinking until the inflation report in March. So there definitely won't be any rate moves before then. And in our opinion, we think the MBH will need to see Euro HUF down near the 305 level and a lower CPI forecast to prompt it to cut again. But there is room.
The forint has gained 0.9% against the euro so far this year. Do you expect the currency to continue strengthening?
We don't see the forint strengthening much further versus the euro. It may remain relatively resilient to wider risk-off trade, as does the CE as a whole at the moment. And so far this has been achieved due to the sort of steady long-term Hungarian yields. And also, the country is being shed in a better light by what is happening in Poland at the moment. The political risk premium has sort of shifted over to Poland from Hungary, and you're seeing a bit of flow coming into Hungary as a result of that. And at the moment, the focus is still on that political risk in Poland. So, really, for us, Euro HUF is a bit of a range trade. We don't see any move below 310 being sustained at the moment. It's likely to prompt some comments from central bankers to try and get the Euro HUF higher, and also it will just cause rate cut speculation. So really, we sort of see it ending H1 more up towards 315, 318, just because markets may by then be pricing in greater chance of rate cuts.
And what will be the drivers and the drags for Hungary's economic growth this year?
Well, for most of the CE region, the main driver of growth is domestic consumption, which was sort of the end of last year and will continue to be for 2016, aided by continued fall in our low oil prices and continued low interest rate environment, help boost consumption and spending. The big drag for Hungarian GDP growth this year is the level of absorption of EU funds, which is going to be markedly lower. This has been factored in already by most analysts and traders. So the risks to this growth are sort of mainly external. And even though Hungary itself is sort of shielded from China trade concerns, it won't escape them, because a slowdown in trade with the EMU could occur if that is impacted by the global supply chain. So this means there will be a risk also of perhaps some further policy surprises from the government and PM Orban, because they want to ensure GDP growth remains buoyant, sort of 2 to 2.5%, if not above that, because they want to achieve that investment grade rating this year, which is on the cards. But the ratings agencies will be looking to see sustained growth and no slippage in fiscal targets.
Christopher, thank you very much for your comments. Well, that is all for the moment. From me, Louise McCauley, it's goodbye.